Welcome to another edition of By the Numbers, where we take a deep dive into affordability in our current real estate market. We'll pull real live properties and give you real solutions and show you what you can do when you are out home shopping. So let's take a look. We'll be using websites like Zillow or Realtor.com and stuff like that. So this particular property, 2534 West Walnut Street, Tampa, Florida, 33607, listed at $450,000. I found on Zillow. If you look on your screen right underneath the picture, you can see the link to go look at it yourself, or you can simply just type in that address into Zillow and it will pull up so you can look at all the pictures there. There's an open house alert on this particular property for tomorrow, Sunday, March 5th from 12 p.m. to 3 p.m. And this listing is provided by Aldo De La Cruz with Keller Williams. Again, found this property on Zillow, and we're going to take a dive into the numbers, show you what affordability looks like in today's real estate market. So we'll be looking at three different aspects of buying. What it looks like when you pay full asking price. We'll break it down from a conventional loan, FHA loan, and a VA loan. If you ask for a price reduction, in this particular use case, I did $15,000 price reduction. Again, same scenario for the three types of loans, conventional, FHA, and VA. And then the last option that I have is what's called a seller-funded buy-down, using seller concessions to buy down your interest rate. So let's take a look at what that means by the numbers. So looking at the full asking price, the purchase price or the list price was $450,000. If we don't ask for anything, just pay as is. Conventional loan, here are the numbers that I use for conventional loan: 5% down, 740 credit score, and here is the breakdown. So a loan amount with 5% down is $427,500. We're looking at a 30-year term with a fixed rate. Rates this morning or yesterday were at 7.125%. So that is the number in which I used. If you put down 5% on a $450,000 purchase, that is going to equate to $22,500. And since you are putting down less than 20%, you will have mortgage insurance, and that is roughly at $235. Moving on to the FHA loan, used 3.5% as the down payment amount, the minimum amount that FHA requires, and the same credit score of 740. So if you take a look, your loan amount is $434,250. The FHA loans do require an upfront fee, so that is tied into that loan amount. So that is why it is higher than a conventional. Again, 30-year fixed rate mortgage. FHA at a 740 credit score came in at 6.5%. Again, FHA always requires mortgage insurance. This particular case, you're looking at $308. One thing to know about FHA is mortgage insurance is for the life of the loan if you put less than 10% down. If you put 10% or more down, you have the mortgage insurance will fall off at 11 years. All right. Moving on over to the VA loan. VA loans do not require any down payment, so we just went with the full asking price, $450 for the loan amount. Again, 30-year fixed rate mortgage came in at 6.625%. There is, again, no down payment, and there is no mortgage insurance. So let's take a look at what that does for the price. So now that we know, we put 5% down for conventional, 3.5% down for FHA, and nothing down for the VA loan. And you can see the respective rates: 7.125% for conventional, 6.5% for FHA, and 6.625% for VA. And here's what your monthly payment would look like. So for a conventional loan, you're looking at $485 going towards your principal, $2,395 going towards interest, and a combine of your HOA, PMI, and homeowners insurance at $416. That number might be a little off because I I did not change the HOA, so that's probably a little off. I will have to look and see if this particular property, actually, I have it pulled up. Let me see if there is a HOA, and there is not, so that it will be a little bit less than what I have here. And taxes, $393. So it gives you a grand total for a monthly payment at full asking price at $3,689. FHA, same breakdown: principal, interest, HOA, homeowners insurance, and taxes. $550 going towards principal, $2,205 going towards interest, $489 going towards the homeowners insurance, and roughly, rough estimate, and then $393 again for the taxes. And we'll move on to the FHA loan, $549 going into the principal, $2332 going to interest, $181 for homeowners insurance, and then the same taxes, giving you a grand total of $3455. All right, so let's look at what a price reduction of $15,000 does for you. So the reduction, you can see the purchase price, or the loan amount went down that amount. So it's now at $412,500, still 30. Everything is going to remain the same. Interest rates, everything remains the same. So the loan amount and down payment will slightly decrease. So take that into consideration when you're looking at this chart. I'm not going to go over all these numbers since it is just a reduction of $15,000, but I will show you what the payment with that kind of reduction looks like. So looking at same breakdown, the PITI, or as we call it in the industry, the PITA. And then for those putting less than 20% down, we'll have private mortgage insurance. So you'll add an additional amount to your monthly payment. So this is $468 going to principal, $2311 going towards your interest, HOA, PMI, homeowners insurance at $362, and the taxes at $381, giving you a grand total of $3,522 for your monthly payment. And now your FHA, same breakdown: $540 going to principal, $2205 going towards interest, $435 for your HOA, PMI, and homeowners insurance, and then $381 for the taxes. So VA loan, $549 going to principal, $2332 interest, $127 for your HOA, homeowners insurance, and $381 for taxes, giving you a grand total of $3389. And then moving on to those seller concessions used for a seller buy down. So looking at a purchase price, again, at $450,000, we're not asking for a price reduction. We're just asking for seller concessions. Seller concessions in this instance, your loan amount for conventional loan is $427,500, 30-year fixed rate again. However, we bought the rate down with the seller concessions. We are going to be paying 2.914% in points, or $12,457 in cash, and that brings your rate down from a 7.125% to 6%. I mean, that's incredible. Mortgage insurance is still at $235, and the down payment is still $22.5. FHA, the loan amount, again, back to the $434,250, 30-year fixed rate, paying points of 2.417 or $10,496, bringing the rate down to 5.5%, which is significant. And your mortgage insurance is at $308. And rounding out with the VA loan, $450,000 purchase price, 30-year fixed rate, paying $14,000 in points, bringing your interest rate down to 5.375. Again, no mortgage insurance on this one or down payment. Let's look at what this does for your payment now. All right. Conventional loan, the same, same rules apply. PITI, principal, interest, taxes, insurance, so $571 goes towards your principal, $1992 to your interest, $366 for homeowners insurance and HOA, PMI, and the taxes at $394, bringing your grand total to $3323 for a conventional loan. Using an FHA loan, you're going to be paying $623 towards your principal, $1,843 towards interest, $439 for your HOA, PMI, homeowners insurance, and then $394 in taxes, rounding that to $32.99 a month for your mortgage. And then last but not least, our VA loan, $656 going towards your principal, $1,863 going towards interest, $131 for your homeowners insurance and HOA, and $394 in taxes, giving you a grand total of $3,045. Now that's a lot of numbers to just kind of know on your own. So let's look at them side by side comparison so you can see where the savings comes in. All right. So the conventional loan, obviously with just paying full asking, there is no savings. But let's look at what a 15K reduction does for your conventional loan. All right, so looking at the conventional loan again, full asking, no savings, 15K reduction, you're looking at $167 a month in savings. And then the big winner here is the seller funded buy down or the seller concessions. Using that to buy down your rate will give you a $366 a month savings. I mean, that's significant. Moving on to your FHA. Again, full asking, no savings when you pay full price. If you ask for a 15K reduction, you're looking at a savings of $66 a month. But again, the seller funded buy down is the winner here at $328 a month in savings. Again, you can see when you apply a seller credit to buy down your rate, makes this market extremely affordable. And then last but not least, our VA loan, full asking, no savings, 15K reduction, same as an FHA, $66 a month in savings. But the big winner here is the seller funded buy down at $410 a month in savings. So in conclusion, seller concessions is the way to go. I mean, it's nice to get a price reduction, but when you get seller concessions and you max them out and you use it to apply to reduce your rate, it's a game changer. It's a win-win for everybody. So in this buyer's market, let's make it work for you. Let's get those seller concessions, reduce your rate, and make this market affordable. This has been a presentation brought to you by JC&C Worldwide, otherwise doing business as Simplified Mortgage. The NMLS number is 2157599. And just for disclaimers, this presentation is for informational purposes only, and it is not an offer to lend. We are a equal housing opportunity. We follow all lending guidelines regarding to fair housing. It has been a pleasure going over this with you. I hope you found this informational. Here's my information. I am a mortgage advisor. I am licensed in Florida, Texas, North Carolina, and Michigan. If you are in need of a mortgage broker anywhere in those states or even outside of that, we have a large network of loan originators across the country that we work with. We're glad to give you a referral. And that same note, if you are in the need of a real estate agent, vast network again that we work with. I am also licensed as a referral agent, and I would be glad to give you a recommendation for any real estate needs. Again, my name is Steven Ozuna. It's been a pleasure. Have a wonderful day.